Coming up on BOC Live, we connect with Beena Goldenberg. She is the CEO of Organigram. They are a Moncton, New Brunswick-based producer. We want to connect with her about their recent financials, about their investment into their facility, as well as gaining market share in Canada. This is Beena Goldenberg. Beena Goldenberg, thanks for being here.
Thank you for having me.
I'm glad we can because this week Organigram released your quarterly financials. We're going to talk about that. And as I was saying for a minute before we came on, it's nice to talk to people that are sharing good news. Not that that's few and far between, but it is nice to talk to people who have good news. And before I begin, was it noticeable that I personally bought Tropic Thunder Jays over the past couple of months? Could you feel that bump?
Absolutely. Listen, we feel a bump, but a lot of people are buying our jar of joints under shred, and that Tropic Thunder is a very popular flavor.
And it seemed to be, because when I went to buy it, I won't say where I bought it, but it was not going unnoticed that it was moving off the shelves by the bud tender. So that's generally a good sign. That's a very micro sign. But talk a little bit about how the last quarter was for you and Organigram.
Right. So listen, we had strong double-digit growth in our top line, and a lot of it had to do with our Shred brand, for sure. It is a great brand out there right now. Number one search brand on the OCS website, 11 out of the last 12 months. So out there for a while, people recognize the brand and are looking for it. You hate to admit when you have demand outstripping supply, but we're in that situation. And there's not a lot of cannabis companies that could say that. We certainly have strong demand, and as part of our announcement with our results, we talked about a $38 million investment in adding capacity to our Moncton grow facility because we have this demand, pent up demand for this brand. And the truth is, we don't even have it in many of the regions across the country. We've got a lot of business in Ontario and Alberta, very limited in Quebec, and we haven't been able to get to other markets because of the demand is so great. So it's really a good problem to have.
It's the right problem to have, and not one that everybody does have. And talk about the brand in particular, because obviously the Shred product, at least the first ones that we came in contact with, I think were the sort of large format, and then it's sort of extending into you're going to correct me when I'm wrong, but like the pre-rolls and then actually edibles as well. Like, talk about that. So the brand has resonance beyond sort of its original format.
Absolutely. So the original format was really bold flavors. It's not simply milling one strain. It's creating a formula that generates, whether it's the Tropic Thunder or Narberry flavor and flavor profile. And then we've taken that to our pre-rolls. We've also introduced Shred-Ems and focused, those are our edibles, and focused on bolder flavors to build it out. And we'll be looking at vapes as well under this brand that really ties back to the flavor profile of what we're offering consumers. So it's a great franchise. A lot of people look at it and say, this is value segment and everybody's talking about moving premium. And listen, we have a premium brand with Edison, and we could meet that cannabis enthusiast with a brand that has the terpenes and the higher THC and the quality bud structure and everything that the enthusiasts are looking for. But you can't ignore the volume of people in the value segment that are looking for a great quality, high potency product at a low price. And what we found is this nice space to be in. The truth is, that's what helps the migration of people from the illicit market into the legal market when the pricing is right and the offering is good. So Shred plays a really important role for us, as does Edison. It's just a different end consumer.
Yeah. And talk a little bit about that, because of course, when you started talking, he was talking about filling the demand even for the Shred product or products. That's sort of part of it. If there was a stable environment where there's a stable number of stores, we relatively know what the demand is. But with the ramp up over the past year plus in Ontario, and it continues, it's not just shooting at a target that is stable. It's like shooting at a target in the future that is growing all the time. And that must be a interesting or different business challenge, especially when you need to grow the product to actually get into the stores.
Yeah, no, absolutely. So there's a lead time factor that nobody likes to recognize, but by the time, growing the flower and then harvesting it and packaging it and getting it, like you're at least 4 to 5 months from, seed to sale. And so just because there's extra demand, you can't, if you don't have it, you don't have it. So we're forecasting, and it's difficult to forecast any new category, any new product. You do your best. Look, the industry went through people over forecasting it a couple of years ago, that there was so much inventory, people had mounds to get rid of. And now it's the other way around, right? Everybody scaled back. And as demand ramps up, it's hard to ramp up as quickly. But, like I said, it's a good problem to have. We are ramping up. We're seeing better yields out of our facility, economies of scale out of our facility. And, we're meeting a consumer need. We're just thinking through our rollout based on what we have available before we roll out to too many markets.
And now there is, at least, I wouldn't call it long-term historical data, but it's 3 years, right? There are patterns, whether there's 100 stores or 2,000, of sort of purchasing habits and what consumers want and what the segments look like, at an ever increasing market, ever increasing number of retailers, ever increasing number of SKUs even. You mentioned something at the top about investments into the Moncton facility. Can you talk a little bit about that? Because we're big proponents of Moncton and New Brunswick overall, but talk a little about the investment you're making in the facility there.
Yes, sure. So we're currently have a capacity of about 40,000 kilos of product annually coming out of the facility. And, we keep optimizing it, so it'll move up just a little bit out of optimizing the grow rooms we currently have. But the expansion 4C that we're looking at will move us to about 70,000 kilograms. And our goal is to have that rooms planted and start harvesting by the summer. So lots of work going on, and it'll ramp us up to a lot of capacity. That's where we'll be able to take a different view to how to expand, across the country, and other opportunities to explore. But yes, very substantial growth.
I like it. Well, I like it. We've been to the facility before, and it's a fascinating place to sort of visit. And if nobody's been to Moncton, independent of what Organigram does there, I would highly recommend. And I'm not just working for the Tourism Bureau of Moncton, but I do think it's a neat town to get there. And so as you look ahead, sort of talking about more capacity coming online, looking at the market as it expands, finding resonance with consumers, I don't want to say you're bullish on the market, but do you feel like Organigram, not so much hitting its stride, but like you understand what consumers want, you understand where the market's going, you're building capacity to meet that demand, like steadier footing than I think? You don't have to badmouth your colleagues in other industries, but you feel like you're on the path.
Absolutely. We have some momentum, and we feel pretty good about where we're going. We talked a little bit about our flower, but we could also talk about edibles. We closed the deal with Edibles and Infusions Corporation last spring. Between the close in April, we launched product by August, and we were already almost a 6% share of national market. Again, with our Shred-ems launch, we had a competitively priced offering in the marketplace that got us quick distribution across the country. And I'm very excited about edibles as well, just because, it becomes, right now that's a segment that's underdeveloped. It's an opportunity for very discreet dosing, and it's a great opportunity. I'm very excited about the facility, high technology, highly automated, which gets us a competitive advantage.
Yeah. And actually, big picture, you sort of, I don't know if you keep a chart like this in your office. I do in mine, but once in a while it comes over like the percentage of market share of the big companies, and there are some with red arrows down and some with green arrows up, and Organigram is a green arrow up.
Which is always great to see. I always like to be green and not red, for sure.
Well, it's good. I want to congratulate you on the quarter, but also thank you as always for the time, because it's always great to check in, hear how it's going, and sort of where you're headed. So, Beena, thank you for the time. We look forward to connect with you next quarter as well, and maybe even next quarter we'll be in Moncton for the opening of those rooms.
That sounds great. Thanks so much.
Thanks, Beena. We'll talk to you soon.
All right.
That was Beena Goldenberg, CEO of Organigram. If you like this program, please rate and review us on Apple Podcasts, Spotify, or wherever you heard the show. It helps support the work we do. We're able to do what we do because of ongoing partnerships with Alterna Savings, Cannabis at Work, Cannabis Benchmarks, Can Delta, Gallagher, Headset, and Torque and Maine. Find out all that we do at businessofcannabis.com.